Hello everyone, welcome to this week's live stream. So if you're watching this live, we do this every week at 2:30 on a Friday afternoon. Look back at what's been going on so far this week, look ahead to what to watch out for next week. And if you don't make it live, there's always the recording to watch. I think like a lot of people, I've been watching another live stream today, this big Jets landing at Heathrow in the storm. 200,000 people, I think, at the peak watching that. So I don't think we get 200,000 people today to watch what the S&P is doing. But the format for today, as usual, I'll go through the usual markets, the major markets that we look at. If there's any questions that you have, any markets you want looking at, if you put them in the chat, then once I've looked at the major stuff, we'll jump back and have a look at the questions, the markets you want to look at. Let's just go through this, the risk warning. The presentation is only for educational purposes. It does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for a transaction in any financial instrument. David Jones and Capital.com accept no responsibility for any use that may be made of these comments and for any consequences or results. Spread bets and CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. 78.79% of retail investor accounts lose money when spread betting and or trading CFDs with this provider. You should consider whether you understand how spread bets and CFDs work and whether you can afford to take the high risk of losing your money. I think a couple of people emailed me and said, can you talk about your own trades in this as well? And I will do. I think I do mention when I've got a trade on. It's a good week for trading this week. I did actually get stopped out of an S&P trade for a loss this morning, but it's been a good week this week. It's been interesting, a lot of volatility. So I'll talk about some of the stuff I trade as well as looking at the other stuff. Let's just take a look at what to watch next week, big events next week. I mean, clearly, inflation and interest rates are still really the big topic for markets. Monday, we've got China interest rate decision. Wednesday, New Zealand interest rate decision, and on Thursday next week, US GDP. So how well or how badly is the US economy doing? And the next bit, I'm going to show you this thing. I was reading something on trading this morning in between watching planes landing at Heathrow, and I thought it's a really good quote, and it perfectly sums up the trading approach that I go through on this channel, the stuff, my own trading, over the years. And I think it's one that you understand if you're an experienced trader, and you probably will be doubtful of it if you're a newer trader. So our minds have a natural tendency to associate complexity, I can't even say it, with sophistication. So we think if something's really complicated, then it's going to be really sophisticated. So the more complicated, the better. But in trading, simplicity is often your friend, complexity the enemy. And I read that this morning on a great trading blog, and I thought this is absolutely a brilliant quote and a brilliant way of encapsulating how we should look at trading. Because I think one of the problems is when you first start trading, you want to put on so many different indicators, moving averages, Bollinger Bands, stochastics, Ichimoku charts and clouds and all of this sort of stuff, and you can't see the wood for the trees. And you'll know if you've watched any of the stuff that I do at Capital, a very simplistic approach, trends, support, resistance, manage risk. And I think it's I thought I'm going to actually do a little bit of effort in my presentation today and include this, because I think it's so important for trading. I think for me, the key over the years, and it took a while to learn, is what you take away is actually the key to finding the right trading approach for you. So there we go. Keep it simple. So quick contact stuff before we get into the markets. Capital.com, obviously, to open an account, open a demo account, download the app, all the usual. Any questions after, drop me an email, david.jones@capital.com. @JonesTheMarkets is my Twitter address. JonesTheMarkets.com is my website. Find out a bit more about me. And follow Capital.com on YouTube, Twitter and Facebook. There we go. Right, let's get into it. We are going to start the week with gold. What an interesting year it has been so far for gold. Dreadful market last year, to be honest. quite boring for a lot of last year. Gold lost 3% in 2021. But what a start it's made, or what a February it's had anyway, actually. If you look at the first month of the year, if you look at January for gold, it ended 2021 at about 1829, and end of January, it was at 1797, so it was down for the month. But I wrote something yesterday about gold, and I think it was up. Was it up about 5% or something? Let me see if I can do the maths quickly. 1800 last month, 1900. Yeah, about 5% for the month so far, gold. And it does feel like we've had almost the perfect storm for gold. You know, coming into this year, we knew inflation was high. That wasn't really nudging the dial at all for gold. We had stock market uncertainty and the stock market slide in January. That didn't really have the impact in gold. But I think if we mix in that geopolitical, clearly the situation we have with Ukraine and Russia at the moment, I think we've seen gold really come into life this month. For my own trading, I've got a trade running on gold from way back last year that's gone nowhere until recently. In this account, from the previous videos we've done, you can see there's a trade running on gold from October, buyer at 1778, and that's up. And there's a trade running on gold from November. So what I'm going to do actually, because I always forget to do this, I'm going to at least bump those stops to break even, because whenever I do trades in this account, because they're for the videos, I tend not to pay that much attention once I've done it. So, the market's at 1890. Okay, hang on a second. Let me just move that. So I'll move those stops to break even anyway. But let's take a look at it. Let's take a look at gold and see where it might go from here. It's had a great run. The trend off the August lows last year is definitely still up. But I did see someone put in the comments, first of all, gold seems to be bearish from 1900, doesn't it? And I would agree that I would be a little bit cautious now up here, you know, because it's quite interesting where it's come to. You know, we've traded up on gold to the best level since June of last year. So we're at a an 8-month high on the price of gold. And you can just see from 1880 in November to about 1920 in June of last year, we have seen the gold. What I would say, actually, you don't need to keep spamming the chat with the same market. If you put it in once, that's fine. So just put it in once and leave it. We've seen gold run out of steam. So I would, even though I've got long trades on gold, be a bit cautious going into next week. I think it's it can be too easy to get carried away when a market has a move and assume, okay, quick, let's get on it because the market's going to carry on. So I would be a bit cautious about how much upside there is left for gold now. I'd still be a buyer on dips. I think that the video we did on gold, I think in January, I said I'd be a buyer underneath 1800. I'm doing another video on gold on Monday. So if you're subscribed to the channel, I'll do another video on Monday. Looking at it in a bit more detail. So for me, I've been a bit nervous up here, but if we did see it start to sell off again, I'd be looking to be a buyer. So I think it's an interesting market to watch. 1900, 1920, big obstacle, and perhaps if we get through here, we're targeting the highs from early 2021. So they're targeting 12-month highs on gold if it can break through 1920. But it wouldn't surprise me if we saw a bit of caution coming back into this market. And clearly, I think one of the things that's lifted it has been the Russia-Ukraine situation. If we, as I'm sure we all hope for, have some sort of diplomatic resolution to that, we could see the price of gold come under some pressure. So, but interesting, and absolutely great month for gold so far, much more interesting than it has been for a while. As we're looking at gold, let's take a look at silver. Have I got any trades on silver in this account? I've got a trade in my own account. No, we've got nothing in this account. Okay, so let's have a look at silver. And again, I mean, it's sort of followed gold higher this month. It hasn't really changed the bigger picture for silver. We're in this broadly sideways market that we've been in now for It's 18 months, isn't it? Pretty much since the summer of 2020. And there's a floor for silver, or there has been a floor at $21.50. It always struggles, or it has struggled over the last 6 months around 24.5, 25. But again, it looks pretty strong at the moment. If we were to flip this over to an hourly chart, there we go. Our trend is doing well. In the last hour or so, we've seen new highs for this trend in silver. If we did it something like that, there's the February lows, so it's the lows for this month. So that trend is still going in silver. So again, it could be a buyer of dips in silver, and as with gold, a short-term buyer of dips in gold. But just a bit cautious about the strength these markets have seen this month, and we know where the problem areas have been for gold and silver in recent months, and it's not that much higher than where we are now. So I'd just be a little bit, how much upside is there left? But for now, those trends are up. As we're talking about, markets that are reacting to what's going on with Russia and Ukraine, thought I'd talk about crude oil. I think I said last week I'd had a crude oil trade running anyway, and I got out of it on Friday night. We saw this massive move last Friday, relatively speaking, after European markets had shut. So it was the 11th. Let me just bring in I think it went up. Here we go. Here's the move. It went up $2.50 in less than half an hour, because I think someone in the US, I can't remember whether it was President Biden or someone else, said that they thought an invasion was imminent, and that was Friday around 6:30 on Friday. I remember I just saw the price suddenly jump, so I moved when I stopped on my open position. I did actually get taken out here later on Friday night, and I was quite happy about that, because I thought I'd had the trade for I think about a week and a half from back here somewhere. So it'd been a good trade. I got in at 87 and out at 91. It'd been a good trade, and I thought I don't really want to hold it over the weekend with everything that's going on, because it could be $5 higher or $5 lower on Monday. As it turned out, we did see oil push a bit higher yesterday, but it's been early in the week, but it's been pretty volatile since then. But let's go back to the the dailies, on oil. So I think it's interesting here. We have seen it last Friday or Monday of this week. Again, another 7-year high for oil. So up at nearly $94 oil. So best levels since, got to go back, since way back here. So October, September 2014, those sort of levels. The big trend off the March low, April 2020 lows, is still up. But this recent trend has clearly come under some pressure. Saying that, for me, for my trading approach, short-term approach, there could still be an opportunity perhaps next week. If I flip this over to an hourly chart, so if you looked at the move since the December lows, the late December low, December the 20th. So that trend, has come into some trouble. Let's just get rid of that for now. And you can see the markets dropped from 94 on Monday down to 88 today. But there's an awful lot of support, not a million miles below where we are now. So big support for me is around 86. And then we've got support from middle of last week around 87.5. So I do wonder, personally I wouldn't be a buyer today. For me, it's up to you what you do want to do. But I wonder, will we see it perhaps start to form a bit of a base down here and have another run up to the the mid 90s again? So I think it's a really interesting market to watch next week. It has come under some pressure for most of this week since Monday, but we've got lots of support here. I think if it starts breaking below, 85.70, then the risk is for a much deeper sell-off. But for me, I'd still be leaning, I think, towards being a buyer of oil from here. We'll see. We'll see what happens. Natural gas. It did it again, natural gas, didn't it? Natural gas, which is, I think, one of the crazier markets. So you can see there's a couple of trades in this account in natural gas at the moment. It came back, I think I bought it for my own account I can't even remember, back here somewhere, and got out after the slide back down. I didn't get back in. I should have got back in. The trend for natural gas is still up. So the trend off June 2020 lows now. So we are, 20 months into this trend for natural gas. It is. I mean, it can be definitely a wild market to trade. At the moment, I don't know what I would do. I'd rather buy a dip for natural gas. At the moment, I'd feel like I was buying halfway in the recent range. So for me, I'd rather try and buy it at the extreme if we saw it fall back below 4. But that trend is still up for natural gas. So we'll see. We'll see what happens. But for me, I'd still be a buyer on weakness. But it's a difficult one to call for me at the moment, trading where it is at the moment. Right, so that's that. So we've done gold, silver, oil, natural gas. Let's take a look at stock markets. It's quite weak today. I trade. Well, I'll talk about the Nasdaq trade when I come to it. But I was expecting yesterday. So I bought the S&P yesterday, sorry. And I thought we'd get a bit of a bounce back today, but it hasn't happened. So I'm out of the trade. If you look at where we are, the market has pushed a bit higher into the middle of the week, and we've fallen back to where it was right at the start of the week. So I think as I said last week on stock markets, for me, the jury is still out on stock markets. Is this the start of a bear market? Is this the market just cooling off after 18 months of strongly rising markets and will form a bit of a base and go higher from here? I don't know. I think it's a difficult one to call. For me, the really big level on the S&P to watch is that January low. So just ahead of 4,200. I think if the market was to break below 4,200, the risk is we are going into a bear market. So for me, I'm quite happy to short-term trade it, but in terms of medium-term trading, this was clearly when it was doing this, great market to be medium-term trade, just be a buyer of dips. I'm just not sure whether this is just another dip or actually the start of a correction. So it's an interesting one to watch. I watch it every day, probably trade it once or twice a week from a short-term trading point of view, but it certainly looks quite weak going into today. I think it's an interesting one to watch today because if we go back to Monday, the market did trade down to 43.60 on Monday, and then we saw this run up to 44.80, and we're sort of back there again. So I think for a short-term trader, it might be an interesting one to watch today to see if we get a bounce. That certainly looks like an interesting trade in terms of risk versus reward. So yeah, that's the S&P. So the jury for me still a bit out in the S&P for now. Nasdaq 100. So I did a trade in the Nasdaq this week. It was a bit fortunate actually because I didn't realise. I think it was when the Fed minutes were coming out this week. So I think I bought. What's the date today? I think I must have bought here. I think I bought on the 16th, and it jumped up a couple of 100 points afterwards on the release of the Fed minutes. So I took my profits pretty quickly after that. But again, the Nasdaq, I think, is the same as the S&P. We had this great trend. The Nasdaq slowed down earlier than the S&P. It was November, I think, last year, the last time we saw a fresh all-time high for the Nasdaq. The market has dropped a lot since then. So again, the question for me would be, are these January lows going to hold? So 13,700 is the big level on the Nasdaq. It's only 400 points below where we are now. And 400 points is not much for a market like the Nasdaq. What did it do yesterday? Yesterday, it moved nearly 500 points in a day. Yesterday, the Nasdaq. So I think for me, the big level is those lows down there. So again, an aggressive trade. If you thought the market's going to bounce back, it is a stop under the lows from Monday of this week around 14,000. So it's an interesting one, certainly, to watch this afternoon. But I personally do think, from a daily point of view, it's all a bit wait and see for me. Anyway, see what happens. And if it does break those lows, then I think for me, I'd be looking to sell into any strength after that. It's the same as we've seen the last 18 months, just the other way around. If we did see the start of a proper bear market in stock market indices, there'll be lots of opportunities just in the opposite direction to the last 22 months or so. Let's see what happens. So I'm still, personally, sitting on the fence a bit. FTSE 100, we did do a video on the FTSE earlier this week on the channel, and it's held up a lot better. It was only last week we saw a fresh recovery high for the FTSE. So the FTSE pushed to its best levels since about January 2020, 2-year high last week for the FTSE. And as explain more in the video from earlier this week, it is in the channel. But the FTSE, is a very different makeup, very different to the Nasdaq, and still very different to the S&P. The FTSE has, more sort of, I suppose you call them value type companies, not the go-getting superstar companies like Facebook and Tesla like they were last year. So is a more defensive makeup. So that's why the FTSE is held up a lot better. And even today, the FTSE's up. So the US market's under pressure, but so far today, the FTSE is up from where it closed last night on our platform anyway. So again, the trend for the FTSE is still up. So for now, be a buyer on dips in the FTSE. If you look on the hourly chart for the FTSE, 74.80 has been big support. The market's come down to 75.20 in the last hour, and it's held. So the FTSE doing something very different to US markets at the moment. Right, what was I going to do next? DAX. So the German market. So the DAX. If we flip this over to a daily, the DAX has been different again. The DAX last year was, this is the DAX from about April, to now. So about last April to now. You can see, US markets continue to push higher. The DAX was pretty sideways for a lot of, 8 months of last year. We had the odd move out to fresh all-time highs, but it gave it up pretty quickly. It's interesting where it is now. The DAX, about 14,800, was big support for a lot of last year for the DAX. The market's at 15,100 as we're doing this. So again, interesting one to watch next week if this old low can hold. But again, if you're bullish on the DAX, it's an interesting buy down here now for me. In terms of risk versus reward. And the Nikkei, which is another market again that's doing its own thing, is like the DAX, even worse than the DAX, pretty sideways for a lot of last year. It's, I suppose, a really aggressive trade on the Nikkei now, right? 26.8 had been 26.8, 27,000 had been good support on the Nikkei. Is to be a buyer with a stop under 26,000, but for me, it's not a market I would trade based on what it's doing at the moment. You could argue the trend from September is still down. So it's not a great trade, I don't think, personally. And then for me, I focus on the S&P and the Nasdaq. I think the Nikkei is just a bit completely directionless and a bit all over the place for me, so not much interest. So for me, stock markets next week, as ever, the S&P is the only stock market I watch during the week. And for me, it's interesting to see, does it hold? And it is, we are seeing a bit of strength just in this hour coming in ahead of those old lows from earlier in the week. So it's an interesting one to watch, the S&P. Right, so we've done oil, gas, gold, silver, stocks. Let's take a look at FX. I've got a trade. I think I've still got a trade. Got a couple of trades on this account, pound against the dollar. And I've also got my own trade on pound against the dollar from back here, I think it was, the 7th of February. So that's been running for quite some time. I think I bought at 135.20. So up a bit on that. And it's, if we flip this over to a daily chart, even though I bought it a short-term buy in the pound, I would still rather be short, if that makes sense. So I think from a medium-term point of view, there are arguments for being a buyer or a seller. as ever. But I think in the pound, if you wanted to construct an argument from a technical point of view, the pound's going to go up. You'd point to this, the break in January, the breakout of that downtrend that had held the market since June of last year. So if you wanted to come up with a chart argument for being a buyer, you'd use that. I would still, even though a market's broken its trend line up or down, I always give it one last chance. So I would still be looking to sell short from a medium term point of view, and I'd have my stop above that high in January. So for me, if it breaks that January high, let's call it 137.50, then yes, it does look like a reversal for me. For now, from a medium term point of view, even though I bought it in a week, I'd still rather be a seller into strength. So I've got quite a tight trailing take profit stop on this trade on the pound. So I think it's interesting, but I think 137, 137.50 is still a barrier. So for my money, I think we're going to go back down before we go up to 140. Let's see what happens. So that's it. So it's been, but you can see it's been a bit directionless really for the last couple of weeks or so. We've had day-to-day volatility, but no real direction. Now, euro dollar, I'm short euro dollar. I went short euro dollar this week. I've got a short in here as well. You can see that was from the video. I think that was a week last Monday. We did the euro dollar video. So I'm short euro dollar at the moment. And I think that's a cleaner trade than the pound. So again, this is the euro against the dollar. Since May of last year, so we're 9 months into this trend has been down. It had the briefest of looks out of the trend line in early February, but it didn't really take out this 115 level. So for me, my target is a run back to those lows around about 111.30 or something like that. And the only thing that would change my mind is if the market broke above 115. So I think, for me at least anyway, that trend in euro US dollar is still definitely down. We'll see. But if it breaks 115, I'll change my mind. But as I say every week when we look at these things, if there's only one market you can look at in terms of foreign exchange markets, currencies, look at the dollar index. So the dollar index, it explains in the right-hand side here, it's the dollar against the euro, the yen, the pound, the Canadian dollar, the Swedish krona, the Swiss franc. So it's against a mix, against a basket. And that dollar index chart trend is still up. So for me, I do have a dollar index trade running because the trend is up. So I think, if we start to see a comeback by the US dollar, and maybe it'll happen next week, maybe it'll start next week, clearly it is going to put pressure on the euro and the pound, the two markets we've looked at so far, because of course they're quoted against the dollar. So I think it's interesting. The dollar index is still up. Let's see what happens. So for me, as long as it stays above 94.60, that trend in the US dollar is still up. So even though it's been a bit of a quiet week, it hasn't changed this 6-month trend in the dollar index. And it was only last month, end of last month, it traded to its best levels since July 2020. So we saw, what was that? An 18-month high, almost, on the dollar index. So I think that's one to watch. Right, we've done all of those. Let's do cryptos, and then we'll jump into the questions. So Bitcoin, I think I said it last week, that downtrend has come to an end, perhaps. This is an interesting market to watch. I'm not a fan of cryptocurrencies, and clearly if you're in the UK, you can't trade crypto on a leverage basis. So I'm not a fan of the whole cult around crypto, but I do think, as a market, it moves like any other market. It just moves more extreme than many other markets. So we had this downtrend in Bitcoin. We broke out the downtrend, and I'd have been a bit dubious about it, but we have pushed out and briefly traded above the last significant high from mid-January. So I think, for me, it will be interesting to see where this weakness stops next week. So for me, if we saw it, what I want to see now is clearly it not to take out these previous lows from 33 to 36. on Bitcoin. So I think it's a really interesting one to watch. Is there a new trend up starting on Bitcoin? Let's see what happens. And Ethereum, I'm guessing it's going to look pretty much the same. Yeah, it's had a little bit of a wobble through that longer term trend, Ethereum. That was the trend going back to December 2020. But as I say, just because it breaks one trend line, I'd always give it a second chance. So Ethereum for me, same setup really. It's been a bit weak the last couple of days. Where does this current weakness stop? If we see a higher low, I think it looks like an interesting trade for me. So I think Bitcoin for me would be on one of my markets to watch next week, which is very rare. And the other markets to watch, stock markets, because of what's going on. Oil, watching to see, even though it's been under pressure for a lot of this week, do we see a base forming this week? And just the S&P to see where it's going to hold. Right, that's that. Let's take a look at a reminder of the contact details. Then I'll jump into the questions. Capital.com to open an account, download our app. David Jones at Capital.com. If you have any questions about anything, at Jones the Markets on Twitter, jonesthemarkets.com to find out more about me. Follow Capital.com on YouTube, Twitter, and Facebook. Right, let's jump into the questions. So we've got about half an hour to do any questions. Let's have a quick look. Gold, we looked at gold. Someone bought NASDAQ and kept my stop loss at 13,600. Let's have a look. I mean, I think, because you're going for the big swing there, aren't you? So, which is fair enough. You know, your stop. If I was a buyer now, that would definitely be for me one place I'd consider putting a stop, because I think if it gets to 13.6, the risk is we're in the next leg down. So it's definitely more of a medium-term trade for me. So let's see what happens. But I think, you know, as a medium-term position, I think it's fair enough. You know, but let's see what happens next week. Soybeans. I've got my biggest. I don't think we cover soybeans actually. We don't, do we? Let me show you on something else. My biggest winning trade at the moment is in soybeans. Great trend in soybeans. I'll have to ask Capital. We should start covering them. But let me show you the trend in soybeans. Great. It was a great market last year. Was it last year or maybe the year before? We get some great trends in the beans. So it did run out of steam in May of last year, but it had been a great trend on the way up. Then we had this downtrend, and then since December of last year, the price has gone from 1,200 to about 1,600. So it's a 30% move in soybeans. Really interesting, and really interesting market. Lots of these other commodities that a lot of people don't look at, So I'm in with a trailing stop at the moment, wondering if it can go back and see the old highs from May of last year, soybeans. So we'll see what happens. But a great trend there, and it does point to why inflation, I think is going to stay around for longer than the central banks are suggesting, because all of these commodities. We look at cotton now and again. Look at cotton. The price of cotton from 2021 has gone up about, 45, about 60%, 50-60% in a year. All of this, all the stuff, real stuff has gone up in price. Coffee, I've got a trade on coffee again because the trend is up. Look at the price of coffee. Since Jan has gone from Jan last year, 123, it's doubled. So the price of coffee beans have doubled in the last year. All of this stuff has gone up in price, and I think that's why I think sugar, inflation is going to be a much bigger issue for a bit longer than some people seem to be suggesting it will be. But there we go. That was soybeans, wasn't it? We looked at the beans. Dollar yen. So dollar yen, I reckon it would be a buy. I reckon, but let's have a quick look at it. Yeah, it feels like it's gone a bit boring, hasn't it, dollar yen? But that trend, because clearly what we're seeing here is dollar strength, that trend since January last year is still up. The only question is, would you buy it here? Or would you wait to see if it dips down towards 113? That would be my only thoughts on it. I suppose an aggressive trade would be to be a buyer now, but I'd probably still want my stop the other side of 114 on dollar yen. I suppose there's an argument for having it. There is an argument for having it under 114.70 as an aggressive stop, but I'd probably still rather have it below here because it still looks a bit sort of, I don't know, choppy and messed up at the moment. But you can't argue with that trend in dollar yen. So for me, definitely still a buyer on weakness. Petroleum GEO. I have got no idea what that is, but let's have a look at. Oh, there we go. Petroleum GEO. Let's see. What do they do? What do they do? So currency, Norwegian krone. Is it krone or krona? Whatever it is. Petroleum Geo Services. One of the most successful international geophysical companies. Broad spectrum of blah blah blah. Okay, let's have a look at the chart. So for me, that is not a pretty looking chart for me. Okay, so we've gone from 20 down to 20 in January 2020 to 2.3 today. Clearly came out with some bad news end of Jan. I mean, it's one for me. If I saw a chart like this, I'd go and look at something else. It's one that's got absolutely no interest for me. But I suppose if you absolutely wanted to be a bottom fisher and we're going to take the view the market's overreacted, you could be a buyer at 2.3 where it's trading now with a stop. I mean, a stop at 1.3 below 1. It's a massive stop. It's like a 40% stop. For me, I hate stuff like this because it's just horrible. To wake up one day and the thing's gone from 4.3 to 2 in a day, to me screams stay away. But maybe you get lucky and you nail the absolute bottom. For me, that would be the level I'd watch, those lows from wherever it is, late Jan. But for me, I'd argue that trend is still down from March last year. So it's not one for me, that one. Barrick Gold. So look at Barrick Gold. You guess that the gold miners would be doing well at the moment, wouldn't you? With the price, I mean, clearly they are very, and you can see here in Barrick Gold, clearly they are very dependent on what's going on with the price of gold, obviously. And a great run in Barrick from $19 to 23 yesterday. Again, I would just, the note of caution I would put in is we know that gold has struggled when it's got a little bit higher than where we are now. So I'd just be a bit cautious as to how much is left. But I'd definitely buy a dip in Barrick Gold. I think we did do a video on this last year, perhaps in the last quarter of last year. And I'm sure Barrick was one of the companies. And I was wondering back then, has that trend come to an end? So, Harry hindsight trade, buying at 18 after that trend line had broken and it came back to a retest was a nice trade. I don't know if I'd be a buyer now up here because for me the risk wouldn't make sense in terms of where my stop would go. But definitely a buyer on dips for that one. Euro Huff. Yeah, let's have a look at that. Euro Hungarian. I remember that being an interesting one from a couple of weeks ago. So Euro Huff. Or was it? Am I getting confused? It's got a bit boring again, hasn't it? I mean, it is. I mean, a big level, massive support at 344, thereabouts. It's just not done very much, has it? So again, I suppose if you really had to buy it now, be a buyer at 357 and a bit with a stop loss. The other side of 351 would be my trade. It's a bit quiet, but I'd take the view that old low from January has held again in February, hasn't it? So be a buyer on dips, but a bit not trending very much at the moment, is it? We looked at natural gas, MasterCard. So let's have a look at the individual stock. I think we have looked at this one before, haven't we? It's just a bit boring again, isn't it? So this is on the dailies. It's just, I mean, it's sideways and it's stuck in the range, isn't it? So it's just boring. To me, I mean, what would you do? It's almost halfway in the range, isn't it? So I don't know. I think that is very much, a broader market dependent one, isn't it? If you see markets fall off a cliff, it's going to drag down, you'd think, the likes of MasterCard with it as well. If you see markets rally, it'll go up, but it's just a bit to me. So, nothing for me on that one. Roblox. I did a video on Roblox this week, the gaming company. I didn't actually really understand what they did. And I did a trade on it, currently losing money. Big loser, that one at the moment, down 190 quid. Because I did do a trade saying, should we take the view the market's overreacted? Because the thing dropped 25% in one day. Because they came out with earnings that missed expectations on pretty much all counts, I think. And I speculated, I think it was the video yesterday, was the market overreacting? And I'd have to say, so far, that looks like that trade is going to get stopped out, maybe. I think the stop is at 49 on that trade, because at the moment, it's still weak, isn't it? It's still going down. I often think, when we see a move like that, where it went from the previous day, $66, and closed the next day at 53, has the market overreacted here? So it can be an interesting opportunity, but they don't work all the time. And for me, I don't think that's one that's working at the moment. So for me, I think the risk is it's going to go lower. Well, it'll be interesting to see if $50 hold. Does $50 end up being some sort of psychological level for Roblox? Let's see what happens, but it still looks pretty weak as of now. I'm guessing it's the biggest loser I've got at the moment in the open positions. What's the biggest winner? Gold's the biggest winner. Meta losing money. That was another one, actually. Has the market overreacted? Natural gas is doing okay. Newmont Gold, because of the gold price, obviously. But Roblox, there we go. So looks like the biggest loser at the moment. But I've got the stop in at 49, so I'm happy to run it and see what happens. But it doesn't look too good at the moment. We looked at gold. Copper creeping up. Yes, I did notice that. I think this is my oldest trade at the moment. I think I've got a trade on from copper, I think from May of last year. And it sort of started getting... Oh, actually, it's not that exciting still, though, is it? It's still not exciting. It's this sideways range it's been in since May of last year. And it has got a bit of a move on over the last week, but it's only back to where it was about a week ago. So for me, I'm still in the trades. I might be slightly in profit. I'd argue the trend from December is still up. Maybe it'll have a run at 470, 480, but it's been, a disappointing market for the last 7 or 8 months or so. I mean, it's still, still mildly positive. It's just not very exciting. So I think the question was, are you going to see an all-time high? I would say that for me, it'd be great if we did see all-time highs in copper for my trade. But I think perhaps we're being a bit over-optimistic there. But let's see. But that trend is still up. You can see the trend going back to March 2020 is still up. But it feels like definitely a lot of excitement has gone out of that market since May of last year. So let's see what happens. Kind of looks like a head and shoulders on natural gas. I do not believe head and shoulders myself, but if you make money from it, good luck to you. Lots of different ways to whatever it is, whatever the phrase is I'm looking for. Yeah, are you saying there's the head and shoulders? Yeah, whatever. Yeah, I can't really see it. Or maybe you could argue there is the head and shoulders. I don't know. I'm terrible at spotting patterns, to be honest. Carbon emissions. This was a great market last year, wasn't it? I think we've for some reason I can't get them anymore on this carbon emissions. We get the futures, but not the cash anymore. So because the cash market, yeah, we definitely can't get it. No, unfortunately, can't have a look at that one. Never mind. Clean Spark doing very well. Clean Spark Inc. There we go. What do they do? They're down 8% today. Clean Spark. Bitcoin mining and energy technology solutions. Okay, that puts me off it slightly, but you're right. I mean, a great run. I'm guessing. I would guess, perhaps with the likes of Coinbase, they are somewhat dependent on what's going on in with Bitcoin. Is an obvious thing, and they've only been listed by the looks of it since December, or at least we've only been covering them since December, so we don't have a lot of data to go on. I could be tempted. I suppose it is a bit of a proxy cryptocurrency play, isn't it? So for me, that trend since January is still up. So it's gone from, it has doubled. It's gone from 5.5 to 11, pretty volatile. So for me, it's an interesting one to watch next week. If you can stand that sort of volatility, something doubling in about 2 weeks, then fair enough. It'd be interesting to see where it forms a base if it does next week. So worth keeping an eye on if that's your sort of thing. Hang on a second, I just jumped ahead in the chat. Can we have a look at platinum? Possible short. I've got a trade on platinum, I think, at the moment. Platinum, I think, was the one that had a bit of a move on this week. Not copper. I was thinking in my head it was copper. Possible short on platinum. Actually, do you know what? You could. There are definitely arguments for going short up here. So I'm long platinum for a while again in this one because I thought the correction from May was over into here. Great trade back in there in December. But if you really wanted to go short platinum, I would have to agree that this looks like a good level because you've got a really good place for a stop just above 110. What is it now? 1100. 1100, the highs from November, from mid-November. So if it's going to run as this bearish divergence, sort of, on the RSI, but perhaps not quite bearish divergence yet. So yeah, if it's going to run out of steam anywhere, this could well be the place. So even though it would go against my position, I can't argue with the logic behind that. And from a risk-reward point of view, certainly, if you put a stop at, let's say 1150, keep the numbers easy for me. So you've got to stop about 60 points away. But if it falls back to the December lows, you've got about 160, 170 points upside if that came off. So it's definitely interesting. So for me, if it broke through 1100 next week, it looks like a breakout trade. It looks like a double bottom for the fans of the patterns, maybe. So it really interesting market to watch up here, platinum. But yeah, 1100 would be the one to watch. Meta, which is the old Facebook. Meta platforms. So I've got a trade on Facebook that I did for a video. So the trade in this platform, and I wondered in a video, I think it was from last week, will $200 end up being a psychological level for the stock? And I bought it at 220 and it bounced for a bit, but not for long. So I think I think if you're a fan of watching stocks, this is an interesting market to watch next week. Does 200 end up being a floor for Meta? For now, it's still pretty weak. If I really wanted to buy them from a medium-term point of view, I would be quite happy to sit on my hands with this one and wait to see it form a proper base. They had that, what hit the stock so hard, of course, it was hit 30% in a day, you can see it here, was, for the first time in its history, Facebook's monthly active users, active daily users, dropped by a tiny amount, but it still dropped. So sort of big hit for Meta. So let's see what happens. So $200, interesting one to watch. But for me, I'd be in no rush at the moment to do anything on that one. Can we have a look at Tech DAX? Tech DAX. No, unfortunately not. We don't cover those. So we can't see those. Meta. Any advice on trading on leverage? Good question. We do a little bit of trading strategy on these things. I would say trading on leverage. Some people get very confused with leverage and tie themselves in knots, okay? And the way to use leverage, everything I trade on leverage. Big fan of leverage. But the way to use it is use it sensibly. Look at this account, for example. So this account is a real money account that we use for the videos. So at the moment, this account has got £16,000 in it. It's got £10,000 available, £10,500 available to trade. It's got £5,500 tied up in leverage. So if I wanted to do a trade on, let's pick a market, let's say oil. So I want to do a trade on oil. I've got 10.5 grand available for oil. So if I want to, say I want to buy oil, margin, so how much can I trade? So I could, in theory, trade slightly less than that, 1,600 barrels of oil, right? So I could do a trade where I have a 1,600 barrel of oil position, because because I'd need 10,500 in my account to do that, and I've just about got it up here. Might have to go a bit less. So every 1 cent move in the price of oil would be 1,600 cents in this trade, which is what, $16? So every 1 cent move in the oil price would be a $16 move in terms of profit or loss. That would be a ridiculous trade to do, yeah? To use all of the money in my account for that trade. So with leverage, don't use it as an excuse to take on much bigger positions than you should that can wipe out your account very quickly. But it's a really effective way of spreading your risk across lots of different markets. And my advice, if you're going to trade using leverage, and I trade using leverage, everything on this account is leveraged, is trade small, okay? Don't use it to go all in on the S&P, the NASDAQ or oil. Use it to spread your risk, like I do, in this account, have lots of different trades over lots of different markets, if that's your style. So don't use it as an excuse to go crazy. So that would be my advice on trade. A part of my advice on trading using leverage. Right, where are we? Sterling yen. I did have a trade on sterling yen. I came out of it actually. It was a great trending market, sterling yen, up until May of last year. Was it May last year? Something like that, yeah. And a bit sideways since then. I had been long sterling yen. I came out of it earlier this week because it got a bit choppy. I do wonder, up at the highs up here, 158 highs, that's been quite the line in the sand since October last year. So for me, it's a bit of a do-nothing market at the moment. It's been a bit sideways since May last year. If it breaks 158 sterling yen, then perhaps we see the start of another run higher, in sterling against the yen. For me, I'd probably rather buy a dip. I think if the US dollar starts to beat up sterling over the next week, we could see it fall. So for me, it's a do-nothing market at the moment because it's just hanging around those old highs in sterling yen. So nothing exciting for me in that at the moment. Sterling, hang on, let's try and skip off some of the sterling ones because we've looked at a lot of FX stuff. Russell 2000, let's take a look at that. Russell 2000, which is is it the smaller cap or the medium cap? Small cap index. Okay, so the Russell 2000. Again, I would argue that is actually in a downtrend compared to the NASDAQ and the S&P. We saw it move to new lows end of Jan for that downtrend. So I would be tempted to probably be a seller into strength for the Russell 2000. It started rolling over like the NASDAQ did in November last year. Had a fairly boring year from Feb to October, November last year. So for me, I'd argue that's in a bit of a downtrend unless it can break 2,100, the Russell 2000. Euro sterling. Okay, we'll do one more. It's all a bit all the same sort of FX at the moment. Some of them, the ones against the dollar are obviously. Euro sterling. We looked at this last week. That trend is still down, I'd say, from 2021. It's interesting. I remember these lows are pretty major lows from 2019. I think I did say last week I was expecting it to go back down again. I think the interesting thing for euro sterling, if we see it lose more ground from here, does it hold again around 82.70, 83 for me, euro sterling? The pound has been much stronger than the euro this week against the dollar, both of them. So I think for me, it's interesting, but there's not much urgency to do anything, I'd suggest at the moment. Today we still have a downtrend in euro sterling since April last year. But we do have a pretty major low down here on euro sterling from 2019. So let's see. Nice haircut. Got my haircut today. Thanks for noticing. Appreciate that. Disney. I've got a short on Disney at the moment. Hang on a second. From last week, we did it in last week's live stream. I would say the trend is still down on Disney for me. So nothing much has changed since then. So I don't know what the short's doing, if the short's making money. £1.23. Made £1.23 since we did that short last week. Top trade. Apple, let's have a look at Apple. The big trend is still up on Apple. You know, it's the same old with Apple, isn't it? The big trend is still up. I'd be a buyer on weakness. The closest I'd want my stop would be the other side of 154. The lows from Jan, but the trend is still up. Halfords Group, the retailer, the UK car parts and bike thingies retailer. I don't know, what do you think? I would argue that looks a bit directionless and a bit down, perhaps. Because we did have a trend, did have good uptrend on Halfords until about the summer of last year, September last year. And then it's just a bit, again for me, it's a bit directionless. I think from a trading idea, I could be tempted to be a buyer if there was much weakness back to £2.60 and see if we get a bit of a bounce. But it feels like it's gone a bit range tradey. So for me, if it weakened a bit more from here, perhaps it looks like a trade, but it looks a lot less interesting than it did when it was in that uptrend for me. But for me, if I was a buyer, I'd want my stop under £2.60, I think, on Halfords. I think we're going to struggle to get... Let me just jump through some of these because we're going to struggle to get through all of these. We looked at oil, we did oil. BT Group, let's look at BT because I think that is an interesting stock, BT. Because it is a big dividend payer, I think. So from an investment point of view, I must admit, this is one I was watching and I think I've missed it. Why haven't we got much data on BT? Let me just drag this across because I think it has reversed a major, there we go, major downtrend for years, BT, from 2016 down to 2020, just slid for years. So it is interesting. I don't know if I'd be a buyer up here. I think it'd be interesting to see what happens around about 210 to 215 because it looks like it's been a real problem. So perhaps it'll struggle. But that's definitely one I missed out on as a long-term buy, BT. We looked at the S&P. What would you do if you only had £1,000 on the account? £1,000 is still a lot of money, or $1,000. You know, because with us, you know, the really important thing when trading is to manage your risk. So if I was trading with £1,000, my rule for trading, I never want to risk losing more than 2% of my trading account. So I'll happily have 10 different trades running, but the risk on any one trade is going to be less than 2%, or 2%. So what I would do, if I got a £1,000 account, I'm only allowed to lose 20 quid on a trade, right? So if I was going to trade something, so let me show you. So with us, because you can trade fractional amounts, I could completely trade the way I normally do. I'd just be risking less money. And let's not forget the golden rule of trading. Most people lose money. Yeah. So if you're going to trade, you have to come into this and think, well, what should I do? What do most people do that means they lose money? You know, most people trade too big. So if I was going to do a trade on the S&P, let's say I was going to buy the S&P today. So I know that the low for the week is 43.60 is the low for the week. So I'm going to put, let's say I'm going to go for a stop 43.50, but I'm only allowed to lose £20. If I put my stop in 43.50, and if I trade one contract, my risk is £19.70. So for me, with a £1,000 account, perfectly sensible trade to do. Let's do that trade. Bang. So we've bought the S&P with at 43.77, a stop at 43.50. My risk is 20 quid. So whatever size account you have, whether it's a million, 1,000 quid, or 100 quid, you really have to think about risk management. The reality is most people will completely ignore that and most people will lose money. So I would say that's maybe the most important thing we've discussed today on this live stream is the risk, is getting your risk management right, because most people lose money, and a big reason they lose money, they trade far too big. So if you've got a 1,000 quid account, I think that's probably a lot more than a lot of trading accounts. You know, you can open a trading account with, next to nothing these days. Whether that's a good thing is a different question. But £1,000 is not a tiny account. Just trade and use sensible risk management with it accordingly. So I would trade exactly the same markets. I just make sure I was on top of my risk management. Aluminium, let's have a look at that. I remember that being a good trending market, but I do remember it hadn't taken out the old highs from memory, and it's still, is it still the same? Let's have a quick look. Oh, it has. We've got a breakout in aluminium. So for me, I would be a buyer. Personally, I'll be looking to be a buyer. Interesting market though, isn't it? Great trend going back to Feb 2021. Sold off heavily from 32.20 down to 2.5, so lost about 25%. And here we are breaking out again. So I think it's an interesting market to watch next week. So for me, if I was a buyer now, the absolute closest I'd have my stop, the other side of 3,100. But I think that's definitely one of the more interesting markets we've looked at today. That's aluminium. So for me, absolute closest I'd have my stop, the other side of 3,100. Perhaps somebody more patient would want to see this market move next week through that high from earlier in Feb, just to confirm it's a valid breakout. So I think it could be interesting, one to watch next week. But we've run out of time, so I'm gonna wrap things up there. I'm gonna remind you of that quote that we did early on in the stream. Our minds have a natural tendency to associate I can't say complexity with sophistication, but in trading, simplicity is often your friend and complexity is the enemy. So I'm a big fan of keeping it simple. Lots to watch next week. Seeing a weaker day for stock markets today. Let's see if they bounce later on. Gold's had a good month. I'd be a little bit nervous about how much higher it can get from here. Let's see. I think oil is an interesting market to watch next week because it's been knocked back so much this week. And Bitcoin. For me, it looks like that big correction is over. Let's see if it makes a higher low next week. So lots to watch. We're doing the gold video on Monday of next week, so make sure you're subscribed to get notified of that. That'll be out on Monday afternoon. And then I'll be back on Friday of next week, do the live stream, and we'll see where we are next week. So thanks for coming along. Thanks for the questions as usual. Apologies if I didn't get around to you. We do have a lot of questions on these things, but maybe next week. Okay, have a good weekend.